All right, Mr. Grider. So big news
Hey,
today in the market, huh? With the UK, with the trade agreement with the
man,
UK. What do you
I
think?
love it. I think everybody has liked some stability in the trade markets. It's like we always tease it. The market's going great today. The next day, oh, that's bad, right? So it's good that it did that, right?
Right.
Even though I was looking at the bond market, I mean the 2 years up nearly 10 basis points, 10 years up what 6, 7 basis points. And again, I mean, I look at this, it goes from up 10 to down 10 during middle of the day. And it's really hard. What I feel bad for is borrowers in a kind of industry. When should you lock the loan? I guess I'd lock it as soon as the borrowers, yeah, accepting the rate, nothing, that's good. Because you just can't control all the media that comes out with that, right? So it is challenging. But I'm glad, and I'm waiting for probably the Chinese market and that trade agreement to be done at some point. I think that would put a little bit more stability.
Yeah, I think there's going
Uh,
to be a chat this weekend with the Chinese, and I believe that some of the hopefully something will be hammered out of that, and then we'll get some stability, right? I mean, one of our biggest trading partners is China, so
Yeah.
we got to get
Yep.
that figured out.
Somehow that feels like it's going to be one of the a little bit down the road. They won't be the second one in for having these trade problems resolved.
Sure.
And when you guys were talking about that, I was thinking that it's nice that it's a bigger trading part, a more significant trading part, like the UK. When they were saying there's a big announcement coming, I was afraid it was going to be, some remote island country that, hey, Grenada's agreed to a trade negotiations, and I was just kind of holding my forehead and saying, "Gee, I hope it's somebody real." And
Yeah, no, it's a big one. The UK is big. I think they're
of
the
course,
sixth largest economy in the world. So good time. So hey,
yeah.
welcome everyone. Thank you for attending another webinar here with us at Home Express. So today we're going to be going over cash out options for non-QM. Market is heating up. So is the weather, right? So it's a good time to help those borrowers get that cash out of their homes. So as always, we want to thank you for your participation. And with us today, we have Mr. David Grider, who is our Senior Vice President of Wholesale Lending at Home Express, myself, Albert Martinez, and I am your corporate trainer here at Home Express. And then we have Mr. Dave Nelson with us, who's one of our top RSMs here in the company, who will be our guest speaker today. So with that, Mr. Grider, I'd like to hand it off to you.
Oh, thanks, Albert. Appreciate everybody attending this webinar. I try to keep it to maximum 30 minutes. So we'll kind of dive into what we're going to talk about today and kind of put it, kind of the agenda here and hopefully kind of tee this up of why we're doing a webinar on cash out and non-QM. And I think when you kind of look at some of these charts, you probably as we get through this, kind of understand why I thought it'd be a good topic to go. So the first thing we're going to look at, Albert, is going to be just the MBA forecast, right? And just kind of give you an idea of what that volume is going to look like. And then we're going to look at the state of consumer debt, the state of the refinance applications. Then we're going to look at the two main programs in non-QM, and that's the small to medium investor and the rental properties and cash out, and the consumer loans, probably more in the self-employed, right? So we're taking a quick overview of our new channel, non-delegated correspondent, and then what I call is our best kept secret, and that's our FHA and VA pricing, right? They give you a couple examples, and please put in the chat any questions you have. It could be on programs, company, industry, scenario, any of those type of things, and I'll address them at the end. So with that, let's just go into the MBA forecast.
Hey, Mr. Grider, as we're talking
Oh, we
about
got a poll.
MBA, how about we ask a little bit about the NBA? I mean, a lot of
Love it.
exciting games.
Love it.
I don't know if you've been seeing it, but
The biggest surprise I've seen, and these are some wild games at the end, but how about those Knicks? Oh my goodness, 20
yeah,
down and at the end, I mean, what great entertainment. You don't know who's going to win. You're up 20, doesn't matter, right? The Knicks come in the last couple minutes, but I'd love to have a poll here, Albert.
yeah, absolutely. So yeah, so let's launch a little poll. Let's see what the masses think about. Let's go ahead and let's ask them what they think about Boston. Do you think that Boston will repeat as NBA champs?
Oh, man,
What
that's a
what's
tough
it?
one. Down 0-2, losing two at home, right?
Right?
I think they're the better team, but but man, some of they're just not at the end. They're just not hanging on to get the win.
They could always
I'd
pull
like
it
to
off,
take
though.
yes with odds.
Well, you have to bet on that, right? Okay, yeah, it'd be
With
long
odds.
odds now, I think, right?
There we go. All right, so let's see what the masses think. No, they do not think that they will repeat as NBA champs. So we will have a new crown.
Hey, I don't know what it's going to be. I mean, shoot, but they've been good. There's a few yeses out there. They could because it's not like they're out of the game. They're just at the end losing by a point or two, right? So they're competitive and they're going to give it their all the next few games. So we'll have to see. So that's awesome.
Absolutely.
NBA, NBA. I like it. That was a good one,
So
Albert.
let's get into NBA. Here we go.
Okay, NBA. No, I know guys can't read this, but I want to have this. Everybody's going to get a copy of the deck that registered here. But I really want to focus in on Q1 and Q2 of 2025, right? And we talked a little bit about the purchases and how to get more purchases in the non-QM space on our last webinar. And that's going to go up from Q1 to Q2 in 2025, 150 billion. But also the refinance market is projected to go up 100 billion. Right. So that's 250 billion from Q1 going into Q2, which is significant. And we just want to make sure we're doing everything we can to help you capitalize on that market growth that we have going into this year. And again, if you looked at the rates, they're saying, hey, high sixes throughout the year, start going mid sixes towards 2026. And you kind of see that from a projection from MBA. With that. So let's take another look at some of this data that we have here. Why refinance? Why cash out? The state of consumer debt. Let's take a look at this. I mean, 18 trillion household debt. That's a big number. And you can see the growth of that over the last several years. It's a big deal. And there's some delinquency rates. And and the borrowers we're getting in are probably ahead of that game, looking at, hey, let's take advantage that I've been waiting for rates to go down. They're kind of seeing the forecast not really happening right now. Let's take care of consolidating some of the stuff now and wait for the rates to go down maybe in 12 to 18 months. But there's a big need for this. So with that, let's go to the next one and look at the state of refinance application. I know everybody took a look at this. There's a Bloomberg article, and I just put the graph on here. But this is the highest share of mortgage rejection since the start of their series on this, right? That was 43% of the refinance applications were rejected so far in 2025. That is a big number, right? But let's get down to it, look at some of the reasons. And so I went and found some data from Bankrate, and I always love the vocabulary they use. So reasons for mortgage denial, right? You have credit issues. Yeah, okay, that kind of does that. You know, don't even have a qualifying score. You got a whole bunch of lates, that kind of stuff. Pretty difficult to get a loan at that point. It's better to jump on it early. Then another one says that you have an income shortfall. I love that word. Well, maybe it's the high cost of living, right? But it's a DTI issue, right, on that. The other one's loan to value. That's tough, right? Because you do a cash out refinance, you're not going to get, you know, the same LTVs as a purchase, and so maybe they're looking at that. Maybe they're in certain areas where the values haven't gone up as much, or maybe they went in at a FHA or VA loan and don't have enough equity built in. But here's the stat for, and I saw that, you know, this is from ICE Mortgage Market Report. The average homeowner today has over $300,000 in equity. That's a big number, right? So, you know, that is one of them when they're applying, but the average homeowner has equity in their home. The last one, I like how they do that. You know, you're trying to finance an out of favor property. That's kind of, I love the wording. I take it as this. It's just too unique where the marketability of that property doesn't appeal to most lenders, right? An example would be, I always use this one, a dome home on 50 acres in the outskirts of Winslow, Arizona. Those are pretty difficult to get approved, right? They're just the marketability of it's there. So most lenders say, hey, that's just too unique, and that's something we can't get done. Then they put on their first key takeaway. And this is the first: mortgage underwriting is often an automated process. Software decides whether you are approved. This is where non-QM comes in because it's not automated like that. It's a story loan. Tell us what's going on with the loan, income-wise. Maybe they had a credit event or 30-day delayed. Tell us the story. And there's lots of ways in non-QM we can work with your borrower to get them approved, right? And so that's kind of what I looked at is why non-QM was here. If you look at why non-QM came out in 2014-15, is because all the loans after the GFC were government or agency loans, and it was all automated. But we had a lot of borrowers that were heavy on assets, great cash flow in their bank statements, but their tax returns didn't work. Where do those borrowers go? They still got loans that they had to go get private money at high rates and all that. And when you go to non-QM today, rates are pretty good, right? They're very more competitive now. It's got a market established, and we're able to help a lot of borrowers with this. But so if you have a deal that doesn't go through that software, but you think makes sense, reach out to one of our knowledgeable AEs, and they'll be able to structure that and hopefully figure a way to, with you, what the borrower has, and look at all the different ways to get them approved. All right, let's go on to the next, and we'll talk about some investment properties here, right? And again, we did a webinar on this, so it's got that. I just caution you that when we do business purpose loans, 51% of the cash out proceeds must be used for business purpose. Then I go into some of the things that you can always do full or alt doc, but primarily what we see is the debt service coverage ratio, which is taking the gross rents divided by the total housing payment. If you're 1 or above, you can get the highest LTV, but we actually do DSCRs below 0.75, to be honest with you. Low LTVs, high scores, they got to make sense. And then I always put on here the short-term rentals, make sure that they're in the high area of density of short-term rentals, resort areas, but we do take a 20% expense factor off that calculation. And the reason for that is that the utilities, most of the upkeep of the property is still on the owner versus the tenant in most cases. So cost the liability insurance more, do that, but lots of different ways to get that calculation as well that's on here. We'll go to the next slide and look at this because I always like showing you where you can market for this without being NMLS licensed. So everything in here in the dark blue are areas where you do not have to be licensed through NMLS to do a business purpose loan. We've added Pennsylvania on here. So if you're in California, one of the lighter blue states where you have to be in those licenses, you can still market to these areas. And maybe you'll have clients that are looking at, hey, the stock market's fail. I'd love to get into some opportunities coming up where I can get some cash flow off some rental properties. You can help them out with those transactions, right? And market those. So it's just widens your area where you can market to and get more close transactions. So, with this, the business purpose, I see most typically is, they're looking for cash out to expand their rental portfolio or upgrade existing rentals. With that, Dave, I'd like to see what you have. I mean, you're every day you're working with your account executives, you're talking to loan officers or brokers. What are they finding? What are you seeing? Maybe give us some market color at your level, what you're seeing today.
Well, my level is seeing a big surge in cash out refinancing. As we came out of the COVID cloud, as I've started calling it, it was a real purchase money market. Agency loans were vogue. Purchase money, I didn't even know where everybody was getting their cash from, but seemingly everybody was buying like crazy. The markets were going, the housing prices, I should say, were going up. And that's where the market was. As and as your chart showed earlier, it's a genuine spike in cash out refinances that we've seen, on my team and in our eastern side of the country anyways, just a lot of cash out refinancing. And I think there's a few reasons for that, which maybe this isn't the forum to go into that, but I'll just touch on it. I think the quality of borrower has gone up. Our average credit score is at or around 720. So the stigma that there was there, say 10 years ago with our non-QM loans, that's really gone away. We have a quality borrower who needs money that they didn't need 3 or 4 or 5 years ago, and they couldn't borrow money at 3 and 4% now, or they can't. So now, how are we going to access this capital? They're finding that places like us here at Home Express, we've got a very reasonable, low priced, relatively, avenue for getting their cash out to them. So we've seen a big spike in the cash out refinancing. As I said, there used to be more cash floating around. We're there to provide it for them, but we've seen a big increase in those applications. I also think there's some of our broker partners that didn't really see a big reason to do a non-QM cash out refinance loan when all these agency loans and things were available. We've really helped them market to the cash out market with the higher quality borrowers. And we do that through a number of, marketing tools I can get into some other time. But, we help them with the marketing, help them with the loan process, and it's an easier feeling process now than it was a few years ago. So I think that all kind of comes together.
Yeah, thank you, Dave. I appreciate that. Yeah, a big spike, and I think that's going to continue the next few months as well. And I'd say about 60% of the units that we get in today are the business purpose, refinance, either purchase or cash out refinance today to buy another one. So let's look at the consumer side here, Albert. And I kind of stick out with the self-employed, the 12-month bank statement. That's pretty much it. But we see some full doc come in, right? And I look at the loan amount. Why is that on there? Well, if you're above the high balance conforming, you're now into kind of looking at non-QM or jumbo prime, and you'll see where non-QM rates mirror or maybe even better than sometimes the jumbo prime, right? Other things we look at here in consumers are credit events. Remember, we talked about that in the earlier slides, but we have avenues for those that might have a credit event that has happened, that now fix, and now the banks are saying no, but it's 75 LTV or 70 LTV, with a good self-employed borrower, full doc W-2, right? The other things we add in is we can use assets to qualify, either in full or as an assistance to the other income they have to help them get done. So lots of ways here to help navigate that. I didn't go into a lot of detail on this. Again, this could be a 2-hour webinar, just some ways to get people approved. But the biggest thing for you to do is reach out to your account executive. They're knowledgeable. They know how to structure these loans, highly trained, and they're ready to help you kind of structure that to get that in. So if you're struggling with the deal on the agency side, just reach out to us, right? We can use the W-2 plus the self-employment plus asset assist and figure out ways to do it. We're not saying if they can't afford it. They can't afford it. They have a willingness or not ability to pay it back. That's not the loan. It's got to fit where the borrower feels comfortable with. They can make the payment, and we're helping them with a genuine need, and it makes sense where it benefits the borrower. We'll go to the next. And I always like to put this to common sense because we get a lot of business bank statement loans in. We have a common sense approach to expense factors, and using our portal, we can do this before you submit it so you know the income up front. If you work from home type of business, it's typically a 15% expense factor, all the way up to 90. We'll go 90 is a high expense factor. It really isn't if you look at a large manufacturing company with several plants, 2,000 employees that brings in a few $1 million a month in gross revenue. That's still a lot of income to be used, right? So it really depends. This is a common sense approach. You kind of let us know what the business is on a small form, upload the bank statements. We're able to give you an income analysis on that relatively quick, generally within 4 hours. All right. So just kind of some highlights on our cash out programs, right? FICO's scores all the way down to 600. We talk about bank statements. We do have DTIs that go to 55 with high residual income. Talk about the program for credit events. We do LTVs to 80, and we can do the non-owner properties for consumer purpose cash out. And they can get interest only to non-QM to keep that payment low if they're looking at that. And again, very competitive interest rates given some of the loan level price adjustments that agency typically has. With that, Dave, I'll let you kind of talk some color on the consumer side and what you're seeing with your team and some of our broker partners out in your area.
Well, similar to what I was saying before, we're seeing more and more of the cash out transactions. For the reasons I did step up before or did mention before, there just doesn't seem to be as much cash sitting on the sidelines. People just need it. They've chewed through it over these last couple of, it's been a difficult year, really, economically. And we've also seen an increase in the quality of our borrower, which I touched on before. Yes, we do a lot of the 600 credit scores. A lot of times, what we're seeing is that we're balancing the different borrowers and how to, and really positioning the loan and how does this loan make sense, particularly if we've got we've got different people with immigration statuses. There's that into the mix now. We see a lot of those that we're able to work through that challenge and get them done. Your list right here. I mean, the cash out has taken a much bigger percentage than our purchase transactions have.
It's starting to creep up there.
It is starting to creep up. It is, and I think it's as everybody gets comfortable, both working with us as our market share has grown. We've gone from a top 10 to a top 2 lender. I think that kind of permeates getting a better blend of our loans than we had before. I think that contributes to it. And the broker community has really, kind of embraced us as a real partner, not just another bank to send their loan to.
Yeah, thank you, Dave. Well, let's take a look at our new channel that we introduced this year, and that's non-delegated correspondent. And this was with a lot of thought and interviews and talking to our partners that we've had over the last decade. We've been doing this for a decade. If everybody thought we're a true lender, we underwrite to our guidelines, we fund with our own money. Some of our partners said, "Hey, what you guys do in wholesale is great. We just prefer to have it in house and be the lender on it. Could you set that up? But we want you to keep everything you do in wholesale, far as your service levels, programs, those type of things." So our non-del will set up that. So there's no carve outs on programs, whether wholesale or on our correspondent channel. Okay, and you keep the same AE. We know these are loan stories. Even if you go to a correspondent side on the non-delegated, you still need to talk to someone about structuring a loan, knows what to do, how to get that loan structured right from the beginning and go through that with you. So you still have that, right? And that gives you, as coming the lender, a lot more flexibility on the pricing, how you're going to do that. And then we go through the process with a kind of a white glove service at the end when then we purchase from you. And we handle most of that. It's just that the docs will be in your name, even though we do that in the closing documents. We make sure those are good for you. So we try to put it out so there's no risk on your part of going that direction. So I'll go through the steps if that's something that you're interested in, or maybe your company that is here, maybe you can let them know. You can reach me, but the first step would be to contact us, right? So contact your AE or myself directly at the end. And then we'll set up another call with your team once you say this is what we want to do, and kind of go, could we have a delegated team with you that goes through that from operations all the way to our purchaser dealing with your funders to make it seamless. And then we kind of show you, we still use the same portal. It's just that it kind of switches now that you're the lender, and you kind of see on the gain of sale on that to make sure it fits. So with that, Albert, we'll go to, well, there's the deck on the steps. As we go into this year, and I know we've been talking a lot about the kind of the rates and everything that's going on. Yeah, I looked at this year. I thought maybe we just had the Fed announcement, yesterday. No change. Looking at maybe possible stagflation. I think they threw out that word. I do still think there might be some rates movement coming up, but it might be 12 to 18 months out. Albert, do we have a poll on that? Maybe we can get the audience to kind of give us some direction.
We absolutely do, Mr. Greider. We do have a poll ready to go about what the masses think about the rates. So what say you, people in the audience? Do you think mortgage rates will go up or down before the end of 2025? Okay, we're starting to
Well,
get some.
I think it's going to go down slightly. Not any big moves, but I think mortgage rates will tend to go down the last half of the year.
I just want to be able to vote next time. That's
Okay. Yeah, panelists can't vote, but that's all right. But I think 2026 is when you'll see, I don't think we're not going back to the 3.5, 4 range, but I mean, I'd like to see, the typical agency loan be in the, mid low fives. I think that would set us off. And I think we still need to look at on affordability side, the taxes and insurance too, need to kind of look at those elements, right? Ultimately, they will do that. So what do we got? All right, 80%, nearly 80% say they're down. I like it. All right, so popular vote.
Well, that'd be 2 loans for all of us if they go down enough.
Well, I mean, we're all waiting for that. So, given all that, I'm going to tell you, what our best kept secret. This is our best kept secret: FHA and VA pricing. And I get asked this: well, why is your pricing? This one's an example of FHA refinance cash out 660 score, putting in 6%, probably on Loan Sifter. Yeah, we're number 2 on this scenario. This was yesterday. It can change today, right? So I just want to give you an example of if you're looking around, we could be an option. And the reason why, because we're a non-QM lender, but a lot of our partners that like our experience with that, so we're able to offer FHA and VA extremely low margins for you since we're primarily non-QM and kind of being out. We're not trying to take what you do in-house. You got it in-house. That's what you're doing. Keep it that way. But if you need to go on the wholesale side, just an example of FHA here. Give us a shot. You'll like our pricing and our service, right? The next slide is going to have VA, Albert, on there to kind of show you what this is on a VA loan. This one happened to be, number 1, not 90 LTV, cash out loan, 450,000 loan amount, 720 score, right there. It's an option for you, right? So we're here to give you options on that. We do have delegated underwriting team for this for you, and the service would be great as you experience with Home Express. So think of us on those government loans. You can find us on Loan Sifter and Lender Price right now, and price it in our XConnect portal. So with that, I just like some extended, cash out guidelines. And I thought I'd talk about seasoning. When I'm on some of these calls with some of our partners, I said, well, how do you deal with seasoning, especially on the investment properties where I have borrowers that do this. They go in, they find properties that they need to rehab. Then they go in, take some 60 days, do the rehab, and then they want their money out from the purchase price and what they put into it. What is your seasoning guidelines? Well, our seasoning really is a valuation concern, and maybe the max loan will do. The value is a value. It goes through a waterfall. Here's the value, give it. But if they bought the property and rehabbed it within the last 6 months, we'll do loan. The value is value. So the LTV can be whatever, but we will allow them to get what they put into the property on a cash out. So the purchase price, some of the costs, and what we can document of improvements, right? Plus, we have the late financing, the fix and hold. So we have those programs available for you, right? Other things are property types. We do rural, short-term rentals, non-warrantable condos, high-rise condos, condo hotels. Some of our limits, let's just go over there. It's unlimited on the cash out at 65 LTV or under, but we'll need a good LOE. If you give someone a lot of money, we got to make sure kind of we know what it is. Then the rest is 500,000, and the LTVs on our cash out, both primary or owner occupied and rental properties go as high as 80. So with that, Albert, coming up on 30 minutes, I think it's done. I'll just give a couple of quick examples. Maybe we'll take some questions, right? So this is an example of a business purpose one, is rental property in Tennessee, right? purchased property with cash in early 2024, 140,000, remodel kitchen and bathroom, new appraised to that, the value got supported. So they recouped their cash investment upgrade costs, and we did a new loan for them. And that was within that 6 months, right? So they bought it within, not even owned it 6 months yet, but it made sense. This is what they do, right? The next one is more on a consumer basis, though, just a typical one that we get in all the time, right? Just sort of refinance, paying off debt, low LTV, full doc, couldn't go agency, maybe it's credit issues or something that came up. We able to get the loan, gave him the cash out, saved him $500 a month. And another thing I didn't touch on this a little bit, but the reserve requirement, right, on these loans, the cash out can be used for reserve. So we have these things done for you to make your loans easy and get through. So with that, Albert, let's take some questions.
Absolutely, Mr. Grider. So we do have some really good questions, and a lot of it seems centric around our business purpose loan. So can business purpose loan cash out proceeds be used for consumer purposes?
Part of it, under 50% can be. Okay, so 51% of it has to go, if you're doing business purpose, right? Not going the TRID route, has to go to business purpose. So therefore, 49% can be used for consumer purpose.
Awesome. Thank you for that, Mr. Grider. Another one has to do with credit scores. And what is the minimum credit score for a cash out consumer and DSCR?
600 on consumer, 620 on business purpose.
Okay. Thank you for that, Mr. Grider. And are we allowed to do dual comp for DSCR loans?
Yes, and we actually have a good feature on this, right? So if you do business purpose and you're approved with us to lender paid compensation on the wholesale side, it's really flexible where you can kind of pick what your lender paid is going to be and your origination that you can charge up front. So that way you can tailor the loan to fit the borrower and the compensation that you're looking for on the transaction. So reach out to us, make sure you do that. We can show you how that works in the portal. But yeah, you can charge both origination and get some lender paid comp. And with flexibility, even if you're, say you're at 2 with us, right? Maybe lender comp on this one's 1, or maybe slightly over that you need to get it done. On business purpose, it's not regulated as it is in the consumer side, and we can help you out with that.
Yeah, we see a lot of those. I didn't have that on my list or think of it before, but we see a lot of that dual comp.
Yep.
Awesome. Thank you for that. And, in talking about, trying to get cash out and trying to help out as many borrowers as possible, what is the normal turnaround time on non-QM loans?
Right. Well, once it gets registered and submitted, right, which you can talk to your AE, do that, but you're able to register and submit your own loans with us. Kind of goes through some type of disclosure process. Business purpose, a little bit easier, right, because it's non-TRID, consumer loans. It takes about 24 hours after disclosures to be in underwriting queue. So 24 to 48 hours, you'll have our, conditional approval out to you, and then you're working on conditions. And then conditions are typically 24, 48 hours. Really quick on the doc side. You really like the service there. We fund on scan docs, try to make it easier for you guys to close more loans.
Excellent. And it seems like we have a final question here, and this it looks like this broker might have forgotten who their account executive was. So they want to ask, can I submit loans without using an account executive?
It depends. I don't, if you're approved with us, yes, you have to reach out to me. There might be a switch on the portal that may not be open for you. And so I'd have to look at that. But yeah, we do allow that. Just got to make sure that your portal is set up to do that. So you can reach out to me or Albert on here, and we can go look for that for you.
Awesome. Thank you for that, Mr. Grider. And that's all the questions that we have. I mean, as always, we will make a copy of this presentation available to you. Not only will it be posted on our YouTube channel, they're also located on our Home Express website, which you can always log in and look at this current webinar as well as webinars in the past. And as always, we want to thank you for your participation. Mr. Grider, if you want to close it out.
Oh, excellent. Well, thank you guys for your partnership. We appreciate it, spending the time, 30 minutes like here once a month with us. And I think the recordings are going to be available. You can check our YouTube channel, but we're here to help you. You got my contact information right here in front of you. You know, if you want to reach out to me directly, love to help you guys out. And we want you guys to be successful. We depended on your success. And so we're here to support you any way we can on helping you close more loans. So thanks again, and look forward to the next webinar next month. So thank you.
Will
Awesome.
do. Yes, thank you, and thanks for having me too.
Awesome. Bye, everybody. Thank you for attending.